Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Hello and welcome back to the Ask Ralph Show. We're getting closer to year end, so I thought it was a good time to start talking about some things that you can do to get yourself financially organized before year end. Now, Christine O'Keefe Merrick posted an article on November 13, 2018 called 6 Things You Should Do Before Year End to Get Financially Organized. And I thought this was really a good topic for this time of year. One thing she mentions here is when you are a financial advisor, you get slammed in January because everybody spends the holiday season going over their goals and dreams for the new year. But the thing she brings out here, this is very important. It's just as important to focus on your financial hygiene in December. Now, December can be a crazy time with everything going on around the holidays and all that thing, but there are 6 things you can do that will definitely improve your financial situation and get you organized. The first one, and this is sort of a no-brainer, make sure you have contributed enough to your 401k and to your other retirement accounts. This is a key thing to do, especially if you've got pretty decent income. 401k contributions are tax-free contributions. Now, for 2018, you can contribute up to $18,500 per year. Now, you could do $6,000 more than that if you're over 50. Now, contributing to a 401k plan allows you to pay income tax only when you withdraw the money from the plan, i.e. when you're in retirement, at which point the gamble is your income and tax rate may be lower, or you may have more deductions available to offset that income. So that's very important. If you haven't already maxed out your 401k, talk to your HR people and see what you can put into it between now and the end of the year. You can do the same thing with IRAs. Now, IRA contributions don't have to be made until you file your taxes, so you've got till the tax filing deadline. But remember, you can only contribute up to $5,500 into your IRA, or $6,500 if you're over 50. So that's number 1. Checking your 401k and retirement vehicles. Number 2, check your gains and losses in your investment account. What we're talking about here, and she mentions this, is tax loss harvesting. I have this conversation with clients this time of year all the time. And what we're talking about here is you need to evaluate whether you can benefit from selling some losing investments to offset gains. So let me give you a real simple example. So let's say you were lucky enough to have sold some stock this year and you've got a pretty sizable capital gain on that stock. You know, it went up in value, you decide to sell it. Well, one of the things you can talk to your investment advisor right now is saying, hey, Joe, my investment advisor, are there any losses in my portfolio that I really should go ahead and cut my losses on? The reason you want to do that is because you'll be able to offset those losses against some of these other gains. Otherwise, if you don't do that, you've got that $3,000 limit of losses you can take per year. Now, here's the thing you want to keep in mind. Short-term gains, that's gains that resulted in the sale of less than 366 days, are taxed at a higher marginal rate. So you want to reduce those first. And don't disrupt your long-term investment strategy when harvesting losses. What I mean by that is, don't just make a decision, well, I'm going to sell something just because, my tax guy said I got to sell something to offset these gains. If it makes sense to hold those things in your portfolio because they're going to improve, then don't sell them. Also, be cautious about a wash sale. And you can look that up on your own. Basically, a wash sale is when you sell and buy a security within 30 days, and you just played a game there. Number 3, complete your college savings contributions. Now, this is if you use a 529 plan. Now, unfortunately, Delaware does not give you a deduction for making contributions to a 529 plan. But if you're going to be making those contributions, make sure you get those in before year end. Now, some states do allow you to take a tax deduction for those depending upon the plan that you have. So you want to check with your individual plans to learn more. Okay. Number 4, manage your income deductions. Now, this is really related to business owners, and we're going to talk in our next session about some year-end tax planning for business owners. But if you're a business owner, you want to manage your income deductions. Also, if you're at or near the next tax bracket, you may need to pay attention. This is where you need to be looking at, even if you're not a business owner, talking to your tax advisor. I have clients calling me now. We're taking a look at year-end tax planning. And let's say that you're real close to hitting that next tax bracket. You might decide to do something like making a charitable contribution, or maybe putting more money into that IRA or 401k like we talked about before. Those are all moves that you can make now, but you've got to plan those ahead of time so that you don't find yourself sitting after the 1st of January wanting to make that decision. Number 5, make your charitable contributions. It mentions here in this article that charitable giving is good for the soul and for tax mitigation. The key to this is making sure that you officially make your donation before the 31st of December for it to count towards your tax return for 2018. There's a bunch of different strategies as you can do here. Giving old-fashioned cash or a check. Now, if you're going to give cash, and I've talked about this in other sessions, make sure that you're paying attention to the rules and regulations go. You need to have proof that you made that contribution. You might also consider donating gently used items and clothing. These are your typical, Goodwill donations or your Salvation Army donations. And, I've talked about that before too. You need to, take a look at that and make sure that you have all your ducks in a row, that you've got the valuations that you needed, that you've got the things documented. Make sure you get a receipt from the charity. Make sure you've documented what you're giving away and the values of that. You can also donate appreciated securities. That's if you own stock that's appreciated over the years. You can receive an immediate tax deduction. This can also help you avoid paying capital gain tax on appreciated portions of the value. Now, all of that said, there are even more sophisticated gifting options. This is where it gets complicated. You need to talk to somebody like myself or a tax advisor or a CPA. There are ways to gift through charitable remainder trust and charitable lead trust. You can also gift life insurance. So those are all things you can do. Now, the final thing we mentioned here is number 6 is evaluate your life. And, she mentions here, wow, this got really deep. But this really makes sense. And I talk with clients a lot when they come in. We give clients an organizer and we give them a list of questions. One of the things that we ask them is, first of all, have they made any major life changes? Because I need to know that to prepare the return. But we also ask them about, are they planning to make any life changes? Are you going to be moving to a new state, getting married or divorced, having a child, changing jobs or retiring, are all important life changes. And those can impact your tax return and could impact tax planning. So these are things you want to bring out with your tax person when you're getting your taxes done, at the beginning of the year. If you're planning on retiring this year, I have a lot of clients. We'll sit down and we'll go over, what to expect, what are some moves that I can make, as I'm getting ready for retirement, or if I'm going to make retirement happen this year. Let's say you're planning on getting married, or you're planning on having a child. Maybe you're planning on moving to a new state. You need to understand, the tax consequences of that. A few years back, I had several clients that had moved from Pennsylvania to Delaware. And, they came in to get their taxes done. They ended up owing Delaware tax. And they said, Ralph, I don't understand that. I've never paid state tax. And what they didn't understand is in the state of Pennsylvania, there is no tax on your retirement earnings, whereas Delaware does tax that. Now, there are exclusions, but these are all things that we could have made them aware of had they mentioned to us. Now, in this case, they were new clients, but if they had mentioned it to us at the beginning of the year and said, hey, here's what I'm planning to do for this year. So these are the 6 steps that you can take to get yourself financially organized for the new year. So hopefully they were helpful.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.